Hi, it's Adam Hewison. I'm coming to you from the digital studios of MarketClub as always, and we're looking at something a little bit different. Actually, we're going across the pond to my old country, Great Britain, and we're looking at the pound-dollar relationship. So as we said before, when it's quoted with the GBP, Great British Pound, in front of the USD, it means when the market's going down like it has been going down, it's showing you that the pound is going down vis-a-vis the US dollar. So let's just take this off the screen for the moment because I want to draw a very important trend line in using our trend line tool. So you click here for the trend line tool. You see how it puts a little yellow box here, and all you have to do now is just basically click here and hold and drag. So we're looking at, this is what we're looking at primarily. And you can, if you want to just adjust it afterwards, you can do that. But that's kind of like the big trend line that we're looking at. And we're seeing this starting back in the July period of last year. So you've had all this time frames from, let's say, July of last year through to the present time in March, where we broke over this level. So it's about 8 months. It's pretty significant, and it has caused the market to have a little bit of a rally, which is good. But we're still within the confines of this relationship. This is a very important level. It's the 150 level. And that's a key level for this relationship. And currently we're trading at 147.08. We're doing this live by April 8th, which is right here, and the chart starts on 5/13 of 08. So the 150 is the big area to watch. So let's take that off, everything off the screen, and we can leave our, no, we'll actually take our trend line off too. So all you have to do is click there, and the trend line's gone. And they're going to put in some of our trade triangles here. The monthly trade triangle is going to go here. And as you can see, we got short here on the monthly at 193.60, which has turned out to be a nice catch of this market on the downside. And I'm going to put in our weekly charts, which is right here. And as you can see, we've had several signals on the weekly charts, all of which have proven to be successful overall. So our last signal on the weekly chart was 145.98. So the market's at 147.05 right now. And we put our daily triangles in, which is the last one we put in. And as you can see, that's a lot more activity. And what we suggested doing before with Forex is to trade on the weekly charts and use the daily for short-term trading. And that appears to have worked out fairly well. So let's look at what we're seeing with our trade triangles collectively. And what we're collectively seeing right here is a plus 55 score. Now when you're in a plus 55 score, it really means that you're in a kind of a broad trading range and not going anywhere. But the great thing about this is the market's getting ready to do something, and that's what I wanted to talk to you today about, and that's getting ready, preparing yourself mentally to get in the market should we breach this 150 level on the upside. So let's take everything off the screen and let's take some of these trade triangles off. See how easy it is to put these trade triangles on and off, and how important the monthly ones are. As you can see right now, this is the last monthly signal. If I just mouse over it, it tells me it's on August 7th when we had the signal at 193.60, which concurs with this signal here. So that was the last signal we had, and it's a significant one because the market's currently trading about 50 cents lower. So let's take a look at what we're seeing now and the potential for a move up. So I want to scope this in a little further, and this is what I'm seeing. I'm seeing a test of this bottom here, which seemed to be successful, but I'm also seeing the potential for this is like a head and shoulders type formation or reversal. So this is where, without question, the resistance is the 150, the psychological 150 level. Now I'm going to be putting in our daily, which we see had a sell signal here at 146.36. So that was a signal to get out of a long position because we were long from 145.98, and that's the important thing to remember. Looking at the weeklies, in fact, there was another signal at 143.76 that we got out of right here. 143.76 we got out of here at 146.36, which is a nice profit because you always want to trade in the direction of the weeklies. And what I'm hoping to do is, if we see this market move significantly higher, is to have the monthly in line as well. But just on the very short term, take this off the screen again, all these triangles. What we're hoping to see is something along these lines. This is major resistance, the 150. Psychologically, it's a big, big level. We're seeing a potential for a head and shoulders base here. I would have preferred it have had to be in lower, but it didn't happen. So this is the left shoulder, this is the head, and this is the right shoulder. Now this will only be confirmed if this market moves up over this level. And should it happen, we can measure from the 150 level down to approximately the 135 level. So that should take this market back to the 165 zone right here. And let's do something else. Let's take a look at our Fibonacci numbers and confirm what a normal retracement would be back to. So let's just take everything off the screen again. I'm going to go out just a little further. Click on a Fibonacci. Once you see this little yellow box up here, you can draw the Fibonacci. So we're going to start up here and drag it down to there. So here we are. We're looking at we said 165 was our target zone, which is right around here, 165. So that's our head and shoulders target zone. And that would appear to be somewhere between the 50% retracement and the 38% retracement. So if we call that, it's about halfway between. So I think that's a good level to be looking at anyway, the 165. Now what's going to bring this about? I'm not sure. And it may not happen. But the reality is, with our trade triangles in a plus 55% position, we're in a trading range. And this trading range is either going to break out on the upside or it's going to break out on the downside. And at the present time, it would appear that the odds would favor the upside. And here's why. You've got your divergences with your MACD or your MACD. You're in a plus position. You have a signal on the weekly charts. We need to have a confirmation on the monthly charts, which is possible. And we've got some nice levels to judge if we're right. So if we go over the 150 level, I think that's something I'm going to be excited about and want to buy this market and get long. So this is Adam Hewison for MarketClub. We're looking at the British pound versus the US dollar, and we may be seeing some good things happen there. So let's watch it very closely and get mentally prepared to trade it. Thanks for stopping by. Every success.